So a client sold a rental, netted over $300,000 in equity, and then had 30 days left to complete a 1031 tax exchange. So he walks into his bank with perfect credit and years of landlord experience, and they tell him, sorry, but your tax returns don't show enough income, so we can't approve your loan. Well, he almost lost the exchange, not because he didn't make money, but because he was actually smart enough to use every legal deduction that he could find. Now, that's when we use a DSCR loan. No tax returns, no W2s, just the property's income to qualify. And that's what I'm breaking down today. How investors like you can buy income-producing property without showing income at all. Personal income, that is. Are you an investor with strong rental income, but you can't qualify for another mortgage simply because your tax returns show almost no income at all? Now, maybe you happen to be self-employed, or that 1031 tax exchange clock is ticking. Your CPA keeps your taxes low, but now the bank says you don't earn enough. Frustrating? Yeah, absolutely. Now, in 2025, there's a program built exactly for you, the DSCR loan, short for Debt Service Coverage Ratio. Now, before we dive in, tap subscribe and turn on those notifications so that you never miss strategies like this one that can help you buy more properties with less paperwork. Now, here's why this matters to you. A DSCR loan qualifies you based on your property's income and not your personal income. No W2s, no tax returns, and no explaining deductions. You're judged on cash flow, not your write-offs. Now, that means privacy, speed, and control, the three things conventional lending takes away from you. Now, if your property's rent covers its mortgage, taxes, insurance, and HOA, then it qualifies. Lenders ask one question: does your property simply pay for itself? And that simplicity is why DSCR loans are perfect for self-employed investors and business owners who use smart tax strategies. Now let's decode DSCR, greater than or equal to 1 in plain English. So if it's a 1.0, that property breaks even. If it's a 1.25, you're earning 25% more than expenses. Profit. Now, if it's a 0.90, you're covering 90%, only 10% out of pocket. This matters because the ratio decides your leverage and your interest rate. The higher your DSCR ratio, the cheaper your money. Lenders like the ones at Bird Eye Loans in the Inland Empire use finance down to 0.80 DSCR. So even under slightly performing properties can still qualify. Now that lets you buy value add rentals before the competition does. And it also allows you to grow equity through better cash flow sooner rather than later. And that's how investors get ahead of the market. And in case you're wondering, DSCR loans aren't new. They actually go all the way back to the 50s in commercial real estate. Banks used to use DSCR to decide if apartment buildings and offices produced enough cash flow to pay their debt. Now, after 2008, traditional, quote, stated income loans disappeared with the mortgage meltdown. But then non-QM lending revived DSCR loans, this time based on verified rental income and not guesswork. So now you get commercial grade financing for 1 to 4 unit properties, and this is why it matters to you, because you can get professional financing without sacrificing your tax plan or your ownership structure. You keep control and you get to build assets your way. Now, these loans today have become mainstream. Lenders offer ratios as low as 0.80, loan to values to 80%, and terms from 15 to 40 years with interest-only options on fixed and adjustable rate mortgage products. And that means flexibility in real estate. Flexibility equals power. So here's what the power means for you. Buy without income paperwork. Close in your LLC for asset protection. And you can close in as little as 10 to 21 days instead of 60. Scale up to 8 properties or $5 million in loans. And that's how professionals grow portfolios fast. Now let's see real numbers. Let's say you buy a $1 million property. You put down 20%, $200,000. Your loan is $800,000. At 7.125% for 30 years, your principal and interest is $5,390 per month. Add $800 for taxes and $250 for insurance. Total PITI equals $6,440. If the rent is $7,200 a month, DSCR equals 1.12, which is strong positive cash flow and top tier pricing. Now, if the rent is $6,000, DSCR equals 0.93. It's still financeable at a lower loan to value and a slightly higher interest rate, but either way, you close. No income documents, no W2s, and no delay. Now, here's where this changes your life. Choose a 10-year interest-only option. It's available on fixed and adjustable rate mortgage products. Your payment will then drop from $5,390 to $4,750 per month. And that $640 a month saves you $7,680 a year. That's back into your pocket. And why should that matter to you? Because that's money that you can use for things like repairs, vacancies, or to fund your next down payment. Interest only isn't just a feature, it's actually a tool for cash flow management and risk reduction. See, liquidity keeps investors alive when the markets tighten. If you invest in short-term rentals, DSCR works there too. Markets like Big Bear, Palm Springs, and Lake Arrowhead fit perfectly into this program. Lenders use AirDNA data or Airbnb receipts to qualify you on 80% of the gross rents. So let's say if you gross $90,000 a year, that's $7,500 a month. They will use $6,000 to qualify, enough for about a $900,000 loan. Now again, why should you care about that? Simply because you can leverage your Airbnb income to buy your next property sooner, not 2 tax years down the road. And that's how you go from 1 door to 10 doors. Own a property free and clear? DSCR lets you pull cash out quickly. If your DSCR is 1.0 or higher, you can take out up to a $1 million loan at 65% loan to value. So even if you bought it 6 months ago, you actually qualify under delayed financing rules. And that means you can recycle equity instead of just letting it sit there idle. You see, access to capital is the difference between watching deals and winning deals. Cash out refis let you move fast when others can't. Now minimums, because they do matter. You need a minimum 640 credit score for DSCR 1.0 or higher, 680 for 0.80 to 1, and you must own real estate within the last 36 months. You need at least 4 months reserves, PITI, base 6 months over 1 million, 12 months over 2 million, 8 months if you are new as an investor. Now, that's not a hurdle. It's how you prove you're a serious operator, and that allows you to earn better terms on your DSCR loan. Now, are there prepayment penalties? And the answer is yes, there are prepayment penalties, and they're typically 6 months of interest on 80% of your loan balance, or a 5% flat prepayment penalty charge. It just depends on the program. Now, why should you accept the prepayment penalty? Well, because accepting a prepayment penalty often saves you 0.5% to 1% on your interest rate, and that bottom line saves you money. So if you're looking long-term, that is thousands of dollars in interest that you get to save. Now, if you're flipping, skip it. You choose the strategy. That's the message here. So the bottom line, DSCR lets you qualify on cash flow alone. The property's profitability speaks for itself, and that means freedom from tax return scrutiny, speed to close in just weeks, and ownership structures that protect your assets. Now, you get speed, control, and scalability. Fast funding with a great lender beats cash buyers, and entity vesting keeps your liability off your personal balance sheet and gives you peace of mind when you need it the most. Wealth is built strategically, not accidentally. So if you're learning something, please smash that like button and subscribe. It tells YouTube that this is real investor education, not fluff. Now, DSCR loans are now mainstream. This program also offers competitive interest rates, only 1% to 2% above your standard conventional loan programs. And they put decision-making back into your hands. When to use cash flow, how to own, how fast to grow, and that's financial freedom with structure. So if this has helped you understand DSCR loans, subscribe, hit the bell, and comment DSCR below if you want a real-world case study next. Now, I'm John Abril, real estate and mortgage broker serving the Inland Empire and all of California. And I'm making real estate and lending simplified so you can actually enjoy the home buying process and build wealth at the same time. Because quality of life, as far as I'm concerned, is just as important as making money, if not more so. Now, if you're facing a 1031 deadline or need a custom DSCR quote, reach out to me. Let's get you funded, fast and smart. Until the next time, invest intelligently, protect your cash flow, and build your freedom one property at a time.